Welcome to Operating with Positive Impact, a brand new series of podcasts brought to you by PwC. My name is Anthony Neve, and throughout this series, I'll be your personal guide in shaping your organization into a sustainable business. Together, we will deep dive into the world of sustainability and its impact on the business world. In our first episode, we talked about the challenge of CSRD as it requires companies to collect a massive amount of non-financial information. While it may be seen as a burden by some, we also opened the conversation about CSRD being an opportunity for redefining your business strategy. In this episode, we will listen to Samar and Marc, who will guide us through this key question: how can CSRD be an opportunity to refine a company strategy and enhance its value creation? Let's listen to Samar and Marc.
Hello everyone, welcome to another episode of Operating with Positive Impact, a podcast by PwC Belgium. Today we're discussing ESG, the value scan and strategy. I'm your host Samar Héchaimé. I lead strategy sustainability transformation at PwC Belgium, and I'm joined by Marc Daelman.
Thank you. I'm Marc Daelman, partner of PwC, more than 30 years of experience, responsible for ESG assurance and reporting.
So today, Marc, we're going to discuss the regulatory landscape and its impact on an organizational strategy and sustainability strategy. So could you give us an overview of what is the regulatory landscape our clients have to navigate, and what are the overarching view that they have to consider?
Yeah, absolutely. And indeed, it is rapidly changing. If I look now, I think over the last 15 years where I have been focusing on non-financial reporting, well, it has been 15 years of voluntary reporting, where companies took the initiative to report on non-financial information and also move towards assurance on that non-financial information. And they used company-owned frameworks, they used international frameworks like GRI and others. However, there was not at all any consistency in the reporting. It was very difficult to compare companies within the same industry with each other because there was no consistency in the reporting at all. Today, with the upcoming new regulation, clearly we move towards a more standardization, harmonization in non-financial reporting, which enables comparison between companies. There will also be an increased transparency because companies will need to make all that reporting public available. There will be an increased reliability and credibility around the non-financial reporting because there is a mandatory assurance, mandatory audit on that non-financial reporting. And also importantly, there will be an increased accessibility for third parties, any third party. It will be made public, but also in type of machine-readable framework, which makes it very accessible for companies. It's very important to realize that, and in fact, it all started from the Green Deal, whereby that the European Commission wants to transition our economy towards a green economy, but not only green, a sustainable economy, social, inclusive economy. And everybody realizes that financial investors, financial institutions will have to play a very crucial role into that because they are steering the flow of money. Mm-hmm. They can allocate money, financial means towards sustainable economic activities, but for doing so, they should be able to identify what is a sustainable economic activity. And that's where now the whole new reporting, the new regulation comes into play, because it will force companies to go out public about the sustainability of their economic activities. And that will be the way how financial investors, but any third party, the regulator, any third party, the people, the workforce, really can see and identify how sustainable is a company.
Yeah. But this is the European side of the regulation, and many of our clients are international operating organizations. How do we help them navigate the international landscape, and what are the challenges they're facing with being compliant and keeping on top of these regulations? Does it make a difference, or do they start converging as well?
Yeah, fair to say. It is a very comprehensive set of reporting which is requested now by the European Commission in view of, if we take the CSRD, the ESRS standards. It's a very comprehensive, and I think one of the key challenges already to indicate is just the time frame. Because if we look to the wave one type of companies, which are the quoted large companies, they need already to report in view of financial year 2024 into the annual report 2025. This is already today. Financial year 2024 is today.
Yeah.
So already the time frame, even for wave two companies, they need to report as from financial year 2025. It is very short time frame. Yeah. And it is a very comprehensive set of reporting. We are talking about more than 1,000 data points. So one of the other challenges we see with clients, with companies, is the data quality of the underlying KPIs and reporting processes, because they were not used to this set of reporting. It is the data quality, but also the audit proofness, the traceability of the reporting processes up to the source documentation, the data points, and the whole auditability. And there I believe, there is a lot of work to be done by the companies to make that reporting set audit proof and to ensure that data quality. Yeah.
It kind of reminds me a bit of provenance in the art world. You have to make sure that you've got the story all the way backwards to be able to tell a compelling and a trustworthy story.
Absolutely. And I think maybe important there as well, maybe to reflect upon, because you can do it because of the compliance, the regulation, but maybe also good to reflect upon, but is there also not an opportunity because of this regulation?
Exactly. And are you seeing that our clients being open to that, or are they getting overwhelmed by the regulation? And can we help them in looking at it as an opportunity rather than as a challenge?
I believe so. But maybe if we look to companies, is also a little bit the question, where do you start, of course, but we are seeing companies which are starting from the strategy, and they say, okay, we want to build long-term value, and what does it mean for us? You start from the strategy, and then you look, okay, we want to set long-term objective targets, and of course, you want to monitor, how do you realize those targets, objectives? Are you in line with those? And therefore, you need reporting. Then they realize, okay, we need to set a robust system, practice of reporting and dashboarding to follow up on our strategy.
Yep.
You have other companies now, because of this compliance, who start off, we need to set up now that reporting, the set of reporting, and they need to determine, okay, but what is important for us? What is material? And then they move towards setting KPIs, targets, objectives around those domains, and realize that, but this brings us now very interesting strategic insights, how our business will evolve potentially, taking into account those macro trends from a sustainability perspective, and it gives that additional strategic insight. Yeah. So I think there is important that a role that we can play in view of how to structure that overall assessment of the non-financial reporting, starting from that double materiality assessment. What is really key? Where do we have an impact on the world? But where also does the world have an impact on us? Yeah. Helping to structure that assessment and bring it really very concrete, tangible in view of monetizing those impacts, those risks and opportunities, because it's not only about risks, it is also about grasping that opportunity. How can we realize further growth, taking on board that climate change, that inclusiveness of economic activities? So how can we grasp that opportunity as well and build accordingly on that, and how does that then impact our strategy? So structuring that process, bringing the right people around the table, bring it at the level of executive committee, at board level, I think is an important role that we can play into that.
Absolutely. And this is where we, from a strategic direction, are very much helped by the reporting and mandatory reporting, because it lays bare the on one hand, the financial impact, but also, on the other hand, the social and societal impact of these different systems. So from a strategy perspective, what it allows us to do is connect these multitude of strategies that make up an organization internally, but also where they sit externally within their context, their worlds. And those reporting, the mandatory reporting, allows us and gives us metrics that we can highlight, on one hand, what the organizational impact is, but also where are the gaps, where they're falling short, and where their opportunities are. So from a strategic perspective, it's a great opportunity to have these conversations that have been hidden up till now at the C-suite, but also give the C-suite these tools that give them the capacity to enable their teams to change their behaviors and change their structures internally, for example, by using a reward and a benefit system to change the conversation, change their models of work, in order to be able to reach the targets that they set based on the gaps or the achievements, the gaps they're seeing or the achievements they want to attain in a strategic transformation based on we all want to become sustainable and have a future.
Absolutely. And it is not only about your own operations. It is really looking at your full supply chain, end-to-end, downstream, upstream. So it's not only having that conversation internally, but also having that type of conversation because, all the supply chain partners are in the same boat, having those conversations with those stakeholders. And what we also see in practice is that, it leads also to good conversations and partnerships with those supply chain stakeholders.
Indeed. Yeah, that is something that I find very exciting, that it breaks the mindset of the C-suite as well as companies to move away from their own silos, because then they're starting to, there's something that's revealing to them that they don't operate in isolation. We've talked about it for a long time, but these reportings are showing it, are revealing it in numbers, whether it is numbers on impact or whether it is numbers on finance. And that changes the whole conversation to a much more holistic approach that enables the conversation to go from a growth, which is not possible because we have the limit of the planet, but to a prosperity and a purpose-driven approach. So that, and from the C-suite level, they need the metrics. And this is offering them the metrics to be able to change that conversation and change the model around it. And this is creating an incentive for them as well, rather than it becoming a burden.
What helps as well in that conversation with the C-suite is that you need to find the right balance, because if you do it at a too granular level, you might lose you in the details, because the universe of sustainability is so broad. You have to be selective and really focusing on the material topics, subtopics. But on the other hand, you need to go at sufficient granular and quantitative level, because just doing the qualitative assessment will not be sufficient, and it speaks much easier if you go up to demonetizing the quantitative assessment of the impacts, the risks and the opportunities that you have, because that's really, if you put that on the table, that you will have the right conversation.
Yeah, absolutely. And that gets us to the space where we can help our clients move away from just the talk, where there's a risk of greenwashing, and move into proving that what they're saying is they can back it by data, they can back it by actual proof. And that revelation is actually being detrimental when the clients or when people are greenwashing, and it's backfiring, as we can see in the case of Barclays in the UK, where they've been saying they're a sustainable company, but their investment is still in oil and gas companies. And that has triggered a reaction from the universities in the UK that have said they are sent an open letter to Barclays from all the universities involved saying talent from our universities are not going to be applying to your bank as long as you're not walking the talk and changing your investment strategies. So there's a repercussion to speaking something and not having the data to back it and not having the strategy to back it. And its ripple effect is beyond the immediate visible. It has ripple effects on trust. It has ripple effects on future strategy and their capacities to be competitive and prosperous in the future.
Yeah, it was clearly one of the objectives of the European Commission is let's now avoid greenwashing. The statements which are made in the reporting, that they are sufficiently backed up and credible. And that's where you build trust. You build trust to any third party, to financial investors, to financial institutions, but also to your workforce to ensure that you have that trust in view of your future talent pool. But also that reliability and the backing up from a quantitative perspective is also necessary in view of that insight that you need in view of your strategy.
Yeah, indeed. And as long as there's no, if we don't showcase that connection, we will lose the opportunities. What do you think is the greatest opportunity that is offered to us to create that space for collaboration and partnership through the mandatory to the strategy?
Well, the biggest opportunity over there is that here you structure it really from your supply chain, identifying, but what are the key elements in my supply chain where I have an impact on the world or where the world has an impact on me. So you really have that detailed view on your full supply chain, end to end, and you translate that into impacts, risks, and opportunities that you monetize to the maximum extent. Mm-hmm. And that's where you have the biggest opportunity to work around those impacts, risks, and opportunities, that helping to set up policies, helping to set up mitigation plans in view of risk management, but also in view of cost reduction. Because if you have a good view on the potential evolution of the pricing of your raw materials or energy, how can you mitigate? Can you charge it through to the end customer, or do you need to mitigate it in view of impact? Also in view of grasping that growth opportunity. So it's not only about risk mitigation, it's also about grasping that growth. And I think that is the biggest opportunity that we see in this exercise.
Indeed. And for me, it creates its impact is in broadening the perspective and opening up the tunneled view we've had through organizations up till now. It starts to show us the ripple effects of what we leave as an impact on the planet and on societies. And I'm actually seeing it as a great opportunity to change the whole conversation from an organizational perspective, but also from a policy perspective, because there's a virtuous loop between the two. And it comes down at the end to the benefit of societies and to the planet. So I'm seeing it as a great positive step. And the more we think about it as a collaborative, the more we're going to be able to change the conversation much quicker and transform the multitude of industries to become or showcase their interconnectivity, whether it is healthcare and preventative medicine, or whether it is the world of the built environment, cities and regulation, or even manufacturing. I'm seeing great hope here, and hopefully we can get everyone on this journey to see it as a space for exploration and innovation rather than be shackled by the limitations.
Absolutely. But then companies also should not only see it as a compliance burden, but also should really foster as well that strategic element into that and how it can help really in that long-term growth and value.
On that very positive note, I think we can wrap it up for today. Hopefully you'll join us to listening on other themes around sustainability, strategy, regulation. We're exploring different aspects of the challenges we all face. Join us for another episode on the podcast, and we hope to have your input as much as possible. Thank you all for listening.
Listening to their conversation, it looks clear to me that CSRD is the opportunity to further understand your company's impact, risks, and opportunities. All these insights can be used to adapt and refine your company's strategy to make it future-proof. Grasping this opportunity will require opening the conversation at board or executive committee level. Marc explained the importance of connecting the impacts, risks, and opportunities to financial terms to facilitate this conversation. We have opened a Q&A section at the bottom of each episode. Feel free to ask us any questions triggered by them. We will closely follow up on them to define the subject of our next conversations. See you in the next one.